Within the semiconductors industry, there's a lot of problems. You have almost all of their stocks pulling back in a very, very big way. You have SMH, which is the Semiconductors ETF, down 19%. You have Nvidia down as much as 25% just a couple of days ago. And so right now, what a lot of people are grappling with is this a big rollover, or is it time to buy the dip? And I don't think you necessarily have to have the answer to that question right now. But what I do want to show you is the stocks that are setting up for the bounce versus the ones that I would avoid, or the ones that are showing problems, to where if the semiconductors do not bounce, there's really not a clear way to manage the risk in an appropriate manner, versus the ones that actually do have potential, setting up for potential bounces, and that have good reward for the amount being risked. Before I go any further, make sure you like and subscribe down below. Click that like button and the notification so that you can get notified of all of my future videos. So what I want us to look at first is SMH. SMH has this really solid trend line that's going back all the way to October, late October 2023, when the market really started taking off and it has put us on this trajectory that we have been on to date. So we tested it once back in April, and now we've pulled back and tested it here in late July. Now, normally this third bounce isn't something that I put a lot of faith in holding. It's not like there's been multiple tests and holds of this trend line. This is only the second test of the trend line, but it's also the most important, because going forward, it will determine whether or not this trend line will have credibility to it. But you look at SMH, you have the double top. That confirmed when we broke below this 256 level. And then when that happened, we went right down to this rising trend line. Now, we haven't bounced yet off of this by any means. We've held it, which is an important first step, but now you need to be able to see that bounce unfurl. Now, one of the things you have to be careful with is the first 30 minutes of trading, because it can give you a lot of optimism, much like what we saw today, where the market's gapping higher, things are moving in that first 30 minutes, but you never approach those highs yet again for the rest of the day. And so it traps a lot of traders. And I always tell people, avoid the first 30 minutes of trading, because that's the most dangerous time to initiate new positions in the stock market. So SMH had a first 30 minutes that were very strong today, but then it faded the rest of the day. Nvidia faded and it took it down with it, because Nvidia has the largest influence on the SMH ETF. So we're still testing it. We're not breaking it, which is good. Now you can say, well, Ryan, we have an intraday break here. That's pretty significant there. Is it not? No, because we held it into the close. It's all about where it closes. It's good to see these reference points where it can break below it. That's something to keep in mind. That means that on a future trade bounce, you don't want to put your stop loss just below like this 235 mark. You probably want to put it below the lows from Thursday. So with that being said, we have to watch this one for the bounce. It's not ready yet. Needs to get back above the 5-day moving average, close above the 5-day moving average, as well as close above the highs from today. Second, let's look at Nvidia here. Now, similar chart. Why is that? Because Nvidia has a huge pull on SMH. And so when Nvidia is struggling, their charts are going to look very similar. So likewise, you have this rising trend line that goes off of the October lows. The only problem is that this one got really overheated here, to where instead it formed a secondary trend line. So the problem here is that we're not close to testing this trend line yet. We're still sitting just above it. We're about $8, $9 away from being able to test it, which gives me a little bit of concern, because if this one does end up pulling back down to 104-ish, unless all the other semiconductor companies can rally, there's a very good chance this SMH is going to blow right through this rising trend line. And that causes problems for the entire industry. Now, Nvidia, if it can hold this trend line and if it gets tested, that's a huge bounce opportunity right there. I wouldn't be trying to play it until it gets down to this level. What happens if it bounces before then? Then it just bounces and you tip your hat to it and you look for a different opportunity. But what I want to look for is where I can judge the reward and the risk fairly and be able to make a good decision off of that. You also have some support here that could come alongside of this rising trend line, to where these two support levels meet and eventually provides a good launch pad for Nvidia to be able to bounce off of. Now, remember, next month in August, you have earnings that could also shake up the stock quite a bit. And what about some other ones? Let's say Nvidia bounces and you never get into it here and it never tests that rising trend line. Well, there's some others to keep an eye on. One of them being AMAT. Now, this one's kind of interesting because it has support and resistance that it's both dealing with simultaneously. You have resistance right here that it broke down below, but you also have some rising support underneath it that could push price right back above this resistance. Now, this purple line has offered up some pretty good support for it, but the resistance is also pushing back. You can see we got right up to it again today, and it pulled back. So in order to get optimistic about AMAT, I love the fact that it's trying to hold the support level just like what we're seeing out of SMH, but it needs to get back above the resistance. If it can do that, then it does set itself up as a really nice bounce play that also has the potential to try and fill this gap from July 17th. Now, some that I think can really go either way, and I really don't know how these two are going to play out. I think they require some sitting on the hands and just waiting for it to tell you what it wants to ultimately do. The first one is ASML, because right now you have this huge topping pattern right here that's unfolding. And if that breaks, and if that 200-day moving average breaks, it gets ugly. However, I can't dismiss the fact that this is setting up as good price level support at this 849 level. And then you couple that with the 200-day moving average that's right above it, there's a tendency for the stock right now to want to hold this level. So if it can break back above all of this, again, you got to ignore that first 30 minutes of trading. Don't get sucked into trading the first 30 minutes. And if it can get back and close above the highs from Friday, I think there's some potential for there to be, at the very least, a dead cat bounce. And like AMAT, you also have this huge gap here that's not been filled yet. Now, one that a lot of you guys are always very much interested in, and that would be AMD. This is a crowd favorite. And this is one that I'm not quite sure which direction this one ultimately takes. You had this huge pullback here. You had an attempt to bounce it, and then it came right back down to this massive support level. This support level goes all the way back to March of 2022. That's over 2 years old. But this level keeps popping back up. It acted as resistance here, and then 2 instances here where it acted as resistance, and then it broke through it. So it shows that it's prone to being able to break through. But more times than not, it holds, whether it's in the form of resistance or support. Here as support, and then again, it's trying to hold this level here as support. So I definitely wouldn't go shorting it here because, one, I think it's very much overextended, but two, you have a support level here that is yet to be broken. So considering this move where it's gone from the upper 180s all the way down to 139 and really no bounce in sight, it's had 2 days where it's traded higher and barely higher at that. You want to see whether or not, again, if it can get back above this 5-day moving average. One area of resistance would be the 200-day moving average at 153. But by that point, you're already sitting on almost 10% in gains if you're able to make it that far. But you need to see this one establish itself as willing to bounce. It's showing that it's willing to hold support, but it's not showing itself willing to bounce yet. You need to wait. You do not have to get in right at this support level. I never try to aim to get right in at this level. Instead, I want it to show me that it can bounce, that it's willing to bounce, and then I get in there after. Some that I would completely stay away from, Qualcomm. Rising trend line off of the October lows. We talked about this with SMH. We talked about it with AMAT. We talked about it with Nvidia. But we're going to talk about it here with Qualcomm, and it's already broken below it. There's really not a lot of support here trying to hold the stock together. You may have some right here that goes back to the support level from March and April. But outside of that, there's really not much to work with here. So I would avoid this stock as a result. Other two would be Micron, MU. Again, you had the huge rally off of the October lows. Got way overextended, but it still looks like it has some more room to go to the downside, possibly is, down into the 107s. The reason why I think that could set up as a good opportunity, you see this white line, that's the 200-day moving average. That 200-day moving average has acted as strong support in the past, namely in October, the last time it was tested, and then you can see multiple times here where it got closer, tested it, and it held and bounced each and every time. So I think there's some history with that 200-day moving average that doing it in conjunction with this rising trend line could offer up support, but I would stay away from it until it gets down to that level, and it's still a good ways away. MRVL, while it has some support here that goes back to about December of last year, it still looks like a very much a topping pattern here. Lots of distribution here going all the way back to December, and it hasn't really participated in the semiconductors rally. Nothing like what we saw of Nvidia or SMH. So I'm a little bit hesitant to want to get into a stock that hasn't really shown itself to be dependable. And then, of course, you have Broadcom, AVGO. This one has a rising trend line here. Really nice, really solid. But it has a ways to go before it gets to it. And it needs to get down to this 143, 144 level before I would get interested in it. But what I like about this one is the fact that it has some support right here, price level support, and a rising trend line that goes alongside of each other, and it's converged together to offer up a really solid support level. But you got to wait for it to get down to that 143 level and show signs that it wants to bounce. Finally, a little bit different than all the other ones we've seen so far is MCHP. A lot of choppiness on this one. When you go all the way back to 2023, yes, there's been an incline to it to the upside, but the wild swings, both higher and lower, has made a very difficult stock to trade in the past. Here you have a key test of support here at the 83 level. It's currently trading at 88. It's back above the 200-day moving average. It's looking to bounce. So the range where this typically bounces to is about the 93, 94 level. So in order to justify it from a swing trading standpoint, I would need to see the technical show that it has a good chance at getting back up into the mid-90s again, which I don't really see that in the chart. So I would hold off of this one. But we've managed to go over a lot of charts here. We've went over the Nvidia chart in detail, as well as SMH and a whole other host of charts too, in terms of stocks to watch to potentially buy the dip on and others to avoid. But remember, what you want to do is on any of these bounce attempts, you want to make sure that it's bouncing off of a key support level, but also showing you that it's willing to bounce. Holding support is not enough. Sometimes it can stay at support levels for a long period of time and then ultimately break to the downside, which you don't want to be left holding the bag on. So you want to wait for it to hold support and then bounce and show it. You don't have to get in right at the lows. You want to get the meat and potatoes. You want to get the good middle part of the bounce. If you enjoyed this video, I would encourage you to like and subscribe to my channel, and let me know down in the comments, what are you doing with this dip in semis? Are you buying the dip, or are you thinking that this might be part of a much bigger pullback? What's your favorite semis going forward? Thank you guys, and God bless.